General advice warning. This information is of a general nature only and does not take into account your objectives, financial situation, or needs. You should consider the product disclosure statement issued by Plantation Capital Limited in deciding whether to acquire an interest in the Passive Income USA Commercial Property Fund. Past performance is not a guarantee of future performance. No earnings estimates are made. Session 7. What are the possible returns? Really, this is the million-dollar question that I get asked more than anything else. And it's a tricky thing because ASIC has firm guidelines and restrictions on what can be said as far as possible earnings. And I am unable to give you any kind of prediction or guarantee as to what is possible. In fact, ASIC prevents me from doing so. But that said, this is what I can tell you. First of all, if you turn in the product disclosure statement to pages 16 and 17, you'll find a range of case studies that give indicative returns or income returns or rental returns, if you like, based on properties that were for sale when the product disclosure statement was put together. And looking at those returns, which are called cap rates, they are between 6.75% up to 11%. And they are before any management costs or fees. And then we get plus any capital appreciation that can be gained on those assets. And if we take a look at some of those assets for a second here, and we look at the ones on page 16, you'll see that there are a range of assets here. For instance, this retail commercial property, high quality building with long-term secure tenant on a triple net lease, asking price $2,508,000, net operating income $194,000, which means what they call the capitalization rate, we would be getting a 7.75% income return on that money. Now, this would be to building leased to Verizon, 7-year triple net lease with 2 5-year options. So if we were to take a 10-year horizon on the fund, and if we were to buy assets similar to this one, then at a gross level, we'd be looking at trying to get some kind of income return of 7.75% before fees. Not giving you any kind of earnings basis or anything else like that, but just showing you the sorts of properties that are for sale right now and the cap rates they were getting. Contrast that with this industrial commercial property, 4 warehouse buildings in Houston in Texas, $1.25 million, net operating income $143,000, 11% return before costs. Different quality of asset, higher return, but leased individually and would require a little bit more management, but higher return. Flicking over to page 17, you can see a range of assets here. 225 lot mobile home park on 66 acres, $3.8 million, $368,000 a year, 9.64%. And that is what is called lot rent, which means that people, it's not an RV park, which is what you see in the movies. These are fixed homes on land that they rent. So they own the home and they rent the land off you. So that's an unusual type of investment, but one that has quite a high return relative to the risk associated with it. So when people ask me, Steve, what kind of income return can I get? I have to say, look, I'm unable to give you any kind of earnings forecast, and I'm also unable to give you any kind of prediction as to any potential capital growth. But what I can do is point you to examples in the product disclosure statement, none of which have been acquired by the fund at this point in time, but to give you a range of options and some idea of the sorts of returns that are possible in the US market at the moment. Moving along then to potential capital growth, again, not able to predict what that might be, but in speaking to the experts, they tell me that the necessary conditions for a return to growth are economic improvement, a housing recovery, and improved access to finance. And where we sit right now is that the economic situation in the US is certainly not roaring ahead or booming, but it's stopped getting worse. And there is definitely a housing recovery in key states that got significantly hit by what they call the Great Recession, what we call the global financial crisis. The other thing I can say about potential returns in the fund is, remember, we are able to pay ourselves a bonus fee if we're able to get a return above 12%. So we will be working, obviously, as hard as we possibly can to get the best return we can, and we're incentivized if we can get that return above 12% per annum net of fees. So a session conclusion then as to what you can expect as a return. Look, it's a tricky thing. There are ASIC laws that prevent any kind of earnings forecast. The best I can do is point you to examples of properties that were for sale at the time the product disclosure statement was put together, to give you some kind of indicative return that's possible in the market. And at the same time say, obviously, we want to maximize income and growth returns. I'm investing my money in this fund as well. Aside from being a unit holder and also being a director, I definitely want to maximize the best possible investment that I can get on my own money and also the return that I can achieve for you too. That said, I am, and the board is motivated to get the best possible return possible. And if we can get that above 12% per annum, then we're able to pay ourselves a bonus. If you have any questions or need any further help, please get in contact with me in the office, Melbourne 03 8892 3800, or email me, steve@PropertyInvesting.com.